Hey, welcome everyone to another exciting episode of the None of Our Businesses show, which is a podcast and a YouTube show. With me again this week is Jack DiMatteo and Charlie Zygmunt.
Hi.
And the three of us are here. We're accountants, and as we've done in this show before, we're here to discuss current topics of the day, whether it be news about business, taxes, finance, things that we think like-minded accountants and other entrepreneurs might be interested in. And of course, we're making that discussion from our perspective, the perspective of accountants. So what do we got on the show today? Well, it seems that America got richer. Really? Let's take a look at that. And the Biden administration is going after UK tariffs on tax services like search. Of course, US consumers aren't using search from UK tech firms, so how do we strike a balance there? We're also going to talk about the SBA Restaurant Revitalization Fund grants, which you should have on your radar, coming up here any day now. And unions coming to Amazon. Finally, the IRS is teaming up with other countries on monitoring fintechs for possible fraud. It's not the Zack Snyder's Justice League, it's the J5. Okay, everybody, as we get into this, if you have any comments, thoughts, or suggestions, please post them to us in the comments section on YouTube. That's a great way to let us know what you think or ask questions about what we're talking about, suggestions of things that we could talk about. We'd love to hear from you, but we're going to get into this now. Jack, tell us about America getting richer, or are they?
Yeah, started off this week kind of interesting, contrary to what a lot of people would think. Wealth actually increased over the last year. Interesting article, and it would be in the areas you would kind of expect to see it. It seems like homeowners, their wealth expanded. Ironically, despite that huge, fearful crash in the stock market early in the COVID period, we've actually recovered those gains and then some. So one of the other big areas that people's wealth has increased is in their stock market holdings. But it was kind of an interesting article because it's people that have income, people that have resources using that. But I mean, there were some things actually related to COVID. One of the ones I thought was interesting is because people can't go out and spend money, they paid down debt. So the ironic part to COVID, a lot of people's employment was eliminated, but the people that had money or was still working seemed to put it to the best use, paid down debt, maybe refinanced their home at a lower interest rates. As interest rates dropped, took some of the money out there, invested in the stock market, saw their wealth increase. And kind of as I was reading this article, it just kind of reminded me of an old saying I've always heard. You see these fearful times and everybody panics, but a recession's when your neighbor loses their job, a depression's when you lose your job. But I kind of thought it was interesting because I have run into a lot of people that during COVID, two-income families, neither one of them lost their jobs. They just kept keeping on, couldn't go to restaurants, couldn't really spend the money, spent a lot of time at home watching streaming TV and banking money and paying down themselves. So I guess, you look at it from the horrifying headlines of COVID, but if you had money and you were judicious with that money and you spent it well and you made some great financial moves, it looks like the majority of America came out better on the other end financially. Kind of curious to see what you guys have seen and what's your take on the article.
Yeah, I think it's one of those things where, on the one hand, everybody was impacted differently by it, like you said. But I think on the other hand, even if you kept your jobs through the pandemic, you still had that constant fear of like, maybe I have it today, but I don't know what it will be like tomorrow. And so it just kind of leads you into making these responsible decisions that you probably should have made either way. But I think it can be good in that regard. And yeah, I think people spending more time at home with their families and cooking and doing things that, that aren't as easy to do without the pandemic going on has really inspired that. And so, yeah, I think it's a great thing.
Yeah, I guess the other shoe to drop is, and I think we may have mentioned this in a prior show, but the other shoe to drop would be inflation, right? Because, if we've got a bunch of people whose wealth is increasing because we've held on to assets and we've spent less and tightened the belt, paid down debt, all that kind of thing, that wealth, the real value of that wealth, of course, is going to be deteriorated if we're facing a lot of inflation on the way. So I don't have an opinion on that, whether I believe there is inflation coming or not. I feel like I've lived through in my adult life a period where I haven't seen it. I haven't seen exactly how it operates. So I can't. I wouldn't care to speculate that I know for sure that it is coming or it isn't coming. But you can hear a lot of the pundits talking about it. So yeah, I think that could be the counterbalance to this good news. Not to be the Debbie Downer on Friday afternoon, but yeah, it's always good to like take things, think about what all sides of potential outcome might be.
Well, it's interesting. We've heard the inflation. Inflation is coming. Inflation is coming since 2008 when we started printing money and making getting the Fed more involved and propping up the stock market. But here we are, over a dozen years later, and we still haven't seen real inflation. I mean, whether it's going to come here or not, it stands to reason. But I just kind of thought it was interesting because it's just the different ways these things affect people. Hey, Charlie, what have you got for us this week?
Yeah, so I've got kind of a different article. I found an article in BBC called Biden Administration Threatens Tariffs on UK Goods in Tech Tax Row. And so what's going on is that the UK has set up a tax on search companies, not just search companies, but internet companies that are deriving value from UK users. And basically what they're trying to do is they're trying to tax revenue of, like I said, people who are selling search services like Google and that kind of thing to people in the UK. And so what's happened is that in retaliation to that, the US has decided to threaten to put up to 25% tariffs on a variety of goods that are being imported from the UK. And so the way that the thought process went is that we'll go ahead and set up a series of tariffs that are equal to the amount of tax that we think are going to happen to the US companies that are getting taxed in the UK. And so it's like a retaliatory move. And the one thing that I thought was interesting about it is that when on the UK side, they're taxing tech companies that have US presence but sell to UK. And then on the US side, that same kind of relationship or scale doesn't exist in reverse. So there aren't a lot of UK tech companies selling to US companies. So instead, they just put the tariff on the only things that they could find to do, which was things like tile, ceramic, a bunch of things unrelated to tech. And so that's actually what kind of caused me to post this article. Is I thought it was interesting as the countries try to balance these taxes, but they're involving industries that really have nothing to do with each other. So it's just, to me, a really kind of interesting idea that we're going to solve a digital tax issue by then turning around and applying that same tax to a bunch of tariffs, to a bunch of things like ceramics. And so I want to get your guys' take on, is that actually illogical, or is that just a necessary step when trying to balance an entire country's, trade relationship with another country? What do you guys think?
Yeah, I guess the response, it seems like doing something in response to try to balance the relationship seems warranted. I think if you're asking the question, is this whole situation logical? I think, if you're from a conservative standpoint, it seems like you would back up and say, well, maybe this is why it's not good for either country to be seeking to slap tariffs on foreign-born services or goods or services coming from each other, because of the fact that it just inspires these kind of results, and there is no real way to balance it, right? So as soon as the UK does something like that on something that can't be balanced out in what might seem like a more direct way, then they're opening the door to the US having responding in kind of a disproportionate, or a way that's disproportionate is the wrong word, a way that's maybe asymmetrical. It's not that doesn't exactly mirror the tariff policy that the UK is enacting. So yeah, I would say they started it. We wish they hadn't, but that's where we seem like we're at.
It's funny. I found this article very interesting because we talk about. I think this country politically is probably more polarized than I've ever seen it in my lifetime. And if you look at the way the immigration approach to the current administration, of the prior administration, it's a complete 180. But if you look at this, and I believe this was even a Trump administration initiative, they even said in the article that I think this is good. I mean, I think this is actually something that may be getting more bipartisan support, and it's one that I could never really understand why the United States, I think, has been bending over backwards with some of these countries and not instituting tariffs and trying to support, global growth when, at the expense of the United States. And so I think it might be, a lesson that we're starting to learn. It's like, okay, great. You want to do that? We can play that game too. And I don't, probably ultimately, a high tariff environment is probably not great for a global economy. But I think at some point you've got to kind of draw that line in the sand and stand up for yourself and say, hey, we're not going to sit there and subsidize you at the expense of all these tariffs you're charging us. You want to play that game? We can play that game too. So I thought it was kind of interesting because, as you see the transition from one administration to another, what changes and what kind of doesn't, what's kind of stayed. And that was kind of interesting to see the whole approach in this article. I wouldn't have expected that.
Yeah, and the other interesting thing about it is that the UK talked about how this tax is a temporary measure, and so it's always interesting to see, well, if we're going to do this as a retaliation, is the timeline for the temporary measure the same as the timeline for this retaliation, or is it going to be the case that one rolls off and the other one just doesn't, and now we've got this weird incongruence built in. So yeah, just kind of an interesting topic, interesting to see how it plays out. Ty, do you have another article we can talk about?
Yes, I've got the article that I have is from the Journal of Accountancy, and I want to make sure I get the title of it right here. They've written a couple articles on this about the Revitalization Fund, the Restaurant Revitalization Fund. This is kind of a little bit of an update for people who might be looking at this, and and to the extent it inspires comment, great, but it's mainly just news here in the sense of the restaurant industry was not fully served by the PPP program the way that it was kind of set up last year back in 2020. And the reason for that is that there were limits on the size of the business that could get PPP, and if your business had ownership. The SBA has kind of complicated affiliation rules. So if your business is by itself a small business, but maybe has ownership, investment, or something like that from a larger conglomerate, that could also kind of throw you out of getting the PPP. So a lot of businesses, a lot of companies in the restaurant industry kind of felt a little bit left out of PPP, particularly if they were larger organizations. And so that's not the only reason for this grant, as is apparent by the way they wrote the rule. But what this Restaurant Revitalization Fund does is it opens opportunity for some government stimulus for the restaurant industry across the board. And for us, it also opens up for distillery tasting rooms as an example of an area that will qualify for this. And so it's a great potential benefit. The problem as it sits today, not a problem, because I think we're all happy that it's there, but the issue for us as accountants, I should say, as it sits today, is that the law is not very specific as to the exact amount of how this grant will be administered and the exact amount. So it's up to the SBA to come out with the rules and standards for how somebody gets their piece of this grant, so to speak, and how they apply for it, how much they get, how it's going to be administered, all that. And so as of last week, I was hearing that I was reading that the SBA would be rolling out any time now, like the beginning of April, would be rolling out the rules that would kind of outline this. And so far, I haven't seen that they've done that quite yet. So maybe by the time this is live and people are listening to it, they will have done that in some regard. What we know about the program, I mean, it's designed to cover things like wages and some of the operating expenses for restaurants or other things that are like restaurants that qualify for this grant. It is a grant. It is administered by the SBA itself. And they've set aside the beginning of the fund for small businesses and those that are operated by or owned and operated by minorities. And so for the first, I think it's 30 days or so, there is a priority listing. You have to kind of meet certain criteria to be on the priority listing to qualify for this. If you don't meet that criteria, then presumably you would be able to be eligible to apply and figure out how to get some of these funds after that first 30-day period. So what I would encourage anybody listening to this to do is check out the SBA website as to what the status is and what the first steps are that you might be able to do to start applying for this if you're in the restaurant industry or in an industry that you think might be tangential or possibly related to this. Just go to the SBA website and find out what the latest and greatest rules are that have been issued, if they've been issued yet, and when you might get your place in line for getting this grant. So yeah, want to make sure our listeners and other accountants and entrepreneurs that are out there have this on their radar, and love to hear if you guys have any thoughts about this.
It's interesting. I had a call with an SBA lender from Huntington Bank, biggest SBA lender in the country. And, I was kind of surprised that even in their this is a grant program, but I mean, even their regular SBA lending programs, I asked her, who's on your do not touch list, who's on your list to go after. And actually, surprisingly, restaurants was one of the ones they're actually pursuing. And I guess if you really stop and think about it, and I'm going to go crazy with the puns here, but there's a real appetite for restaurants because I've gone out, whereas 3 months ago, you go to a restaurant and these places were, they weren't even hitting the diminished capacity. When I go to restaurants now, they seem to be, busting at the seams with their capacity, people waiting outside to get in. So if you look at what's going to be a growth, it's not like people are going to stop eating or stop eating out. So I think the restaurants are going to be very healthy going forward. Kind of a few of the interesting ones that were on their kind of do not touch list were, they still were shying away from trucking companies, which surprised me a little bit, and still hospitality. They don't really see hospitality coming back. Kind of interesting. I saw that a little bit firsthand today. Went to get my license renewed in Ohio. I don't know if this is just Ohio or if this is a federal thing and it's all states, but there's the different levels of driver's license. And if you want, I guess, roll through the airports to travel or go places, you need a certain kind of elevated driver's license status, which at this time I don't have, but I thought that was kind of interesting. So it almost speaks to the fact that I don't know that travel may come back soon, but it's common sense. I think there's a lot of people that want to get back to normalcy, and I think going out to eat is one of those tried and true American events that people just like to get out and mix with their friends, and it's great that they've identified this as a need. But what do you think?
Yeah, I think you're exactly right. I can speak from just Oregon. I've been seeing that same thing where restaurants looked desolate and now are seeming to be more full. I think as people are getting vaccinated, they're getting a little braver and getting out and wanting to do things. And the nice thing about eating out is it's one of those things you can do to kind of get away from the monotony of the everyday, but without having this, big vacation plan that you might need for the hospitality industry. And so I just think it's one of the more achievable escapes for people. So yeah, and I'm with you. I think it's going to be experience a stronger rebound than a lot of other industries because of that.
Yeah, I would pick up from kind of what Jack mentioned about the SBA and SBA lenders looking for restaurants. I mean, it seems, unfortunately, there's a lot of restaurants at the local levels that got ran out of business during COVID. And so that's left kind of neighborhood spots open, right? And one of the SBA programs, the 7A loan, is designed for business expansion and business acquisition. And the way they've expanded the availability or the way they've expanded the 7A program in kind of the recent history is really being able to get these 7A loans with very little to no money down on business expansion. But the catch, the thing with that is, or with business acquisition. So in other words, I could foresee scenarios where if you're a restaurant operator and you wanted to acquire another restaurant in a different neighborhood, or you wanted to expand your business into another neighborhood, that you could, that I would say, building off what Jack was talking about, now may be the time to go talk to your SBA lenders or talk to your financial advisors about talking to SBA lenders, as the case may be, to see what's available for you. If you have an appetite for kind of coming in and helping in the reopening of the economy, so to speak, right, and getting involved in that kind of thing. The thing about those programs is that what they're looking for is that you actually have experience in whatever industry you're in, right? So if you're looking for SBA lending, like a 7A program to acquire a restaurant or to expand your restaurant business, they're looking to the fact that you are an experienced operator as the basis for extending those kind of loans. So anyway, it's probably not the right program for a pure startup who doesn't have experience but wants to try their hand at the restaurant business. That's probably not going to be a successful way to go. But I'm not an SBA expert by myself, so don't rely just on me. Talk to your financial advisors about that. But I'd say but if you are an operator, you are in the restaurant industry, or you've been in the restaurant industry, this could be a really great way to access capital and grow or continue on with your business. Maybe we pitch it back to Jack. What's next?
I think this next article may spark some interest. It's got a lot of different angles to it. We're talking about Amazon beating back the union dragon, and a couple things I thought was kind of odd about it. It was in Alabama, of all places, is where there's, I guess, a concentrated effort to try to push a union into Amazon. I would expect it from where I am here in Cleveland, which is old school union country. And it was kind of funny because, we were talking about McDonald's last week having their spies and trying to beat back the $15 an hour people. And I think I mentioned at the time, it sounded very reminiscent of some of the things I've seen here in Cleveland growing up, is how companies try to fight union infiltration. And you kind of the whole same playbook came up in this article. I mean, they're doing the same thing. They're, of course, technology changes. Back then they'd have their union spies, and now they're sending texts to employees and trying to talk about the evils of unionizing. And I know Amazon's one of those go companies that's one of America's sweethearts, and they've, along with Walmart, been able to kind of keep the unions out. But kind of an interesting perspective. I would not have expected to see it in that area of the country. Again, unions generally, their best bet is disgruntled employees. And as far as, you read by the headlines, I know Walmart really tries to get out ahead of, paying a better wage than the competition. I think Amazon is kind of tried to do the same. I think the only way you're going to kind of fall prey to unions is disgruntled employees. Very surprised at the area of the country. And like I say, all the tactics they use, I've seen that playbook before. What do you guys think about it?
Yeah, I mean, when you think about the concept of unions, right, as our economy moves forward and history unfolds, if unions are to continue as a thing, then it seems natural that Amazon would have unions, right? I mean, Amazon being such a large business, we've talked about before, Amazon taking over the world and becoming a bigger and bigger part of the economy. If unions as a concept are to be a thing in this country, then I would say, how could Amazon not have a union, right? I mean, so I think it's indicative of, I think it may be ultimately what happens on this may be kind of the story for unions across the board, right? Whether unions are even relevant to the American economy in the future or not, may be somewhat written by what unfolds here with Amazon, right? Without getting into the politics of whether I believe in unions or not, I would just that's my observation about it, is that this is probably a pretty important development in terms of whether unions are part of our economy in the future or not.
Yeah, I agree completely. I mean, I don't know that I necessarily have a lot to add to it, but I would just say that anytime the bargaining power of not two people, but a company and its workers is so unconnected, right? Amazon has all the power in this relationship over its workers. And so I think that disconnect is what drives the potential need for a union. And I don't think it's as obvious in every industry, but I think Amazon is probably the best example of taking that idea to the extreme. And yeah, it just seems like a really good opportunity to get something into place that could actually help a lot of people. So I've got another article we can talk about from Accounting Today that's on a little bit of a different topic. IRS has teamed up with other countries to basically detect tax fraud among fintechs. So among these financial technology companies like cryptocurrency companies and that sort of thing. And so what's happened is that the IRS has a criminal investigation division, and they've gone out to other countries and developed this team called the J5. It's comprised of the US, Canada, Netherlands, Australia, and one more, HMRC in the UK, of course. And so what it's looking at is just whether or not these fintechs are enabling crime by creating a network of people who are able to transact without having government oversight into it. And so there's been a couple examples. The article talked about earlier this month that an investigation led to the CEO of a Canadian tech company getting indicted on some criminal charges. And so one thing I found interesting about it is that the J5 has what they call challenges. And so every year they get together and focus on different issues that they want to work on. And so they considered focusing on COVID-19 fraud, but they decided that this fintech was a really good opportunity to focus on something that could have impact a large industry. And so it talks about kind of what the role that those fintech companies should be doing in terms of crime prevention. Here in the US, banks are heavily regulated and have the know your customer rules that help them to make sure that they're not enabling terrorism or other, money laundering and that sort of thing. And so I guess my question is, what role do you guys think that fintech companies should have in that area? Should all these fintech companies that do cryptocurrency be required to have their own know your customer regulations, or is that actually somebody else's responsibility? And what do you guys think about that?
It's funny. I mean, I remember working with that know your customer. I think it's the person that has a direct relationship with the company with the customer should be responsible for that. But it was kind of interesting reading this article, and I was going through that. I'm thinking, well, gee, doesn't the IRS have enough things they can look at, here before they start looking at that? And as I read through the article, it's, the infamous, well, there's a lot of money involved there. So it's like when they asked Willie Sutton, the bank robber, why do you rob banks? Well, that's where the money is. So there's something that they're not, and I kind of looked through the article and I wanted to see if they kind of talk specifically about, what pointed them in that direction. They kind of alluded to the fact that there's a lot of money involved. So that's why they're kind of expending resources, going in that direction. But, I kind of look at it and it's like, well, you probably, a lot of littles may add up too. I mean, there may be some compliance issues that you look at here, but I guess they're looking at, if somebody is slipping through the net at a grander scale, there's more to be found there. And if they've got, 4 or 5 other, some of the other major economies and countries in the world that are assisting in the effort, it's probably something well spent. But, I know that know your customer, they take that very seriously. I've been involved with some software implementations that, involve getting banking information from people, and they take that very seriously. There's a lot of compliance involved there, a lot of cost involved with that, which is, some companies will shy away from that. But, I think the person who's closest to that customer has that relationship and should get that information, should keep those tabs on them.
Yeah, I mean, I think one of the developing sagas of our time is what's happening with fintech and cryptocurrencies and its relationship to government's ability to control monetary issues, right? To control, monitor, and regulate monetary issues. And it really raises a fundamental question about the nature of governance as to whether the ability to have control over how money is transmitted, who has the money, knowing who has the money, how it is tracked, cataloged, and all of that, whether that ability is a cornerstone to what makes kind of national sovereignty, so to speak, right? So I don't think I think we can expect more of this kind of cooperation between jurisdictions politically across the board to try to rein this in, because, this kind of thing is one facet of this, as I called it, a saga in terms of a potential threat against the system of national rule that we have across the board. But what's fascinating about this point, I think that there's a lot of folks in the security world who are concerned about this issue, about the inability to track, monitor, and know the customer with regard to digital financial transactions and the storage of value through digital means, through cryptocurrencies. But the way in which we were able to track or not really plain hard cold cash was not like perfect to begin with, right? So the focus, I think part of the story in this saga is going to be that that the angst and the kind of all the noise that is around, we can't let this digital world get out of control and be unregulated, actually may swing the pendulum farther the other way than it ever was to begin with, right? Because there was already a certain amount of unregulated cash being stored under mattresses and then buried safes in the backyard and transmitted in cases in all kinds of ways across borders that was not really being able to be controlled by governments cleanly and whole and completely. And the digital world, I mean, a lot of people on the side of libertarianism and freedom see the digital world as, now we can be completely free of government control. But that could really actually go completely the other way. It could be that digital currency actually is the doorway to absolute control over the tracking and cataloging of value and currency exchanges in a way that it wasn't with just physical cash. So I think this could, the end of this story could actually be that governments ultimately have more information and more control than they ever did to begin with, when it's all said and done.
Yeah, I agree completely, because this whole thing of these countries getting together to work on this issue, like you said, stemmed from that, and there wasn't a separate task force dedicated to cash or underreported assets in the past. So I do think that really sets the groundwork for that to happen, and we're seeing that. We're seeing all these other changes with them trying to move towards digitization of records. So I know that in the UK they're trying to do making tax digital. And I think that that's a different issue, but is a groundwork kind of a piece that gets placed so that these, agreements between countries can be administered in a more effective way. I just thought it was kind of an interesting topic, and it'll be fun to see how it all plays out. And I put fun in quotes because, we're talking cryptocurrency. So, all right, you guys got anything else we can talk about?
Well, just to follow up on that, Charlie, it's kind of interesting. I mean, 30 years ago, a lot of the things that are going on today were appeared in science fiction books. Well, they're here today. And, we talk about, the government there. So we've got all these tremendous tools out there. Government has, tools at their disposal that have never existed before to kind of track some of these things. And I think, we kind of saw it. I was watching a Robinhood CEO gave quite probably about a 20-minute interview on Bloomberg yesterday. It was kind of funny there. We kind of saw how, as much as the government thinks they're controlling people's thoughts or actions, we saw how Robinhood was able to pull off something that they never saw coming. So, I like I say, I think a lot of these things were, sounded like science fiction 30 years ago, but they're here today. So I think we're, kind of trying to work through and that's where you get the pushback on, privacy and how much we're going to allow the government to control. But this one's kind of interesting because if you're going to go after the big money and you want to stop it now, I mean, because that's with this cryptocurrency, that's how you can kind of jet across borders and hide certain assets, and that's kind of been going on forever with Swiss bank accounts in the Cayman Islands, and I think they're trying to get out ahead of this before it gets to that point.
All right, everybody. Thanks for watching. That's been our show. This has been the None of Our Businesses YouTube show and podcast. Tune in again next week for more business updates from an accountant's perspective. And please check out our sister podcast, Profitless on Purpose, where they take a look at all nonprofit issues and talk about different business issues from their perspective. It's on the same channel, so why not? All right. Thanks, everybody. Bye.
Bye.